All right, what's going on, guys? Happy New Year. Hope it's been treating you well. The markets have been interesting. I'm going to show you a clip. I'm going to play it early for you guys. Watching this play, you can see here's one part of it. It started with $60. It led to this finally closing this put of 628. You will get to see the best part is I did this all live. This was on the YouTube stream. So why I want to show this. So one, there's a great lesson here about positioning, trading weekly options, trading options in general, and especially during this volatility. So the next best part is you get to watch me do this live. It's not like it's one thing for me to make this play and say it, but you're watching this literally live during this type of market environment and seeing how I'm maneuvering the options. I think it's a really good learning lesson, and I even give the lesson live. We have a lot of people there, so make sure you guys check out the stream. We're on at 6 a.m. Pacific time, or 30 minutes before market open. If this video is helpful, like it and subscribe if you want more of this. It'll probably actually help you. But give me some questions below. Let me know what you guys think about this. Actually, too, before I say that, let me give a disclaimer. One, I suck at trading options. I am not a professional. Go consult with a professional stock advisor, financial advisor, whatever. That's one thing that came to mind. But this is, that's generic disclaimer. But mainly, this is a weekly option play. I'm showing you guys this so you see how I maneuver the volatility, and you could learn from this and know that you can apply this in certain situations. This isn't just, okay, Josh did this and now you're going to be able to repeat this every single time. This is extremely risky, especially with weekly options. It's very low probability, and ultimately this isn't something, again, my net worth, my account size, your guys's, but although it's small amounts, just in general, you got to be careful with this style of play. So that being said, check out this clip and let me know what you guys think.
Apple puts are just, I don't know why I think it's with Qualcomm. I think Qualcomm and Apple, again, last time we saw that, but someone take a look at that or see if you could find any news, or if you go through the last time there was the Qualcomm thing, see if any date falls around here, because this is the premium on Apple's going up, and that's the thing. You look at Apple compared to Amazon, it's hesitating, even compared to Facebook. So now I think, yeah, Qualcomm's still going. I'm trying to see if there's an inverse between Qualcomm and Apple, or if they're kind of just running at different speeds and Qualcomm's just catching. I think they are. Qualcomm just getting more of a bid. Oh, shit. Those NVIDIAs. Damn it, I should have signed you guys to that. Someone stay on those NVIDIAs. What was it? 139. They're at 50 cents and they're at 30. Yeah, they're at 39. Damn. Those ones are at 50 cents now. So you could have got the other 137s. I'm going to wait though. Like I said, even with the Facebook puts. Like, I grabbed that one more Amazon, and I'm just going to wait now, give it more time. It's only been 45 minutes. The market's still down. These are one of those days. Again, think these are your puts where, if I'm thinking Amazon calls and I'm like, I'll wait for calls, I should be eyeing the put right now to purchase. I'm saying the NVIDIA 130, someone was already watching it. They called it out. 139 for today. 139 strike. Anything, I think, that's a $6 move in today, tomorrow, and Friday. That's fairly cheap, but I guess you should probably scale in on it. I don't want to miss that one. It's cheap. $50 is decent. I think, yeah, I'll get more. I'm going to scale one more of these. I'm going to grab one for 50 cents. Destroy. Yeah, 100%. That's what I'm looking at. The pound is getting crushed. The dollar's down. I think if oil comes up, it's just confusion now. But this is dislocation. Honestly, that's what you want. This is the first big moment of dislocation and divergence that you got to be careful, because it could wreck you. That's what I'm worried about. I'm thinking puts. the market's looking good now. I'm thinking puts towards the end of the day or even nowish, but the problem is it could rip even more, and that would just destroy. Damn. I have a question though. Did anybody else play the Nvidias with me? Do you guys see these? Tell me that wasn't a beautiful call out. Honestly, that was great. That's 60 cents to 180. That's 180 on the bid. You're about $1.20 from the money, and it's Wednesday. So now this is where you guys get to see the finesse now. And now look at those 132s. Didn't I tell you? $60. These are the puts we could get now. Now look at that. You see how the puts just capitulating, and it was just that $3. That's going to be our play. That's going to be my market come down play. But that's what sucks. It's just that daily. That's what I don't like about it. Maybe we could go to next. I'm going next week on my other computer. I'm seeing those are expensive. Yeah. But that was a good play. I wonder how many of you guys got that. But now it's seeing how do we secure this play? How do we go about playing it? And then, what's going to be the deal? Yeah, McDonald's. Yeah, the McDonald's calls, those didn't work from the day before, but I got the next week's actually. I need to see how those are doing. I haven't checked on those. But I'm waiting. I'm gonna get some of those NVIDIA puts. My McDonald's are up 0.5%. Not really. All right, I got some of those NVIDIA puts to hedge the position. I think those would be really cool. I think the 133s, those will hit in the money. They're a little bit more expensive, but I think the risk reward is almost this. I just like these ones. Those are the ones I identified in the beginning, just like this one this one was from the morning. That was a good. I want you guys to see though. This was how did I pick this contract? Does anybody remember that? I said it in the beginning, right after I got it. I said there's one key that stood out to me that made that a good contract. That's what you guys gotta. Man, that you guys are trying to learn the contracts. That was a great lesson. That was both putting the market together, but then also there was a key about that option. It was risky. It was still a daily, but NVIDIA, it offered something there that was really, really unique that we liked.
So if you guys got it from the beginning, I showed the entry. The first clip or the first part was at 10 a.m. when we made the first trade on the call. So if you're not familiar what happened, we bought the 139 call. And the whole idea was it was at 60 cents, and I thought it could go to the money. We bought it at the end of the week. We bought that for 60 cents. Now it was up. And this is the time when I got the put at like 117. We're like, well, it's up. But now I turned $60 into it was worth $180 at the time. So I was saying, and if you go when I skip to when we bought the puts, in both instances, at the first beginning and at the last part, this is why we need you guys in the chat. So I signed people to, I said, watch this. Someone called out the NVIDIA call. I pointed out the 139 because it could go to the money. And we're going to talk about those specific factors. And then I also told people to watch the 132 because we were watching it when it was much higher priced, when the stock was lower. So it was about picking and identifying the option. And that's what you guys see during volatility. The key is timing, especially on these dailies in general. If you don't have timing, you'll get crushed even if you're right, just by, if you bought that 132 and it was a much higher, you wouldn't have made as much money as we did today. So that really is one of the biggest keys. It has to do with the timing. But I told them to watch it. It came to the price I wanted, $60, and I bought it. And think about it. The call was worth $180 now. I was at the money at the time. It was near the money. And I was thinking, well, about what? $1 from the money, eventually even two. It was really close to being in the money. There was still time in the market and time on it. This is where it was risky and dumb, because I put $120 and I already had $180 on the table. Although I am saying to secure the position, you have to understand the total risk there would have been $300 I could have lost, and that would have been very easy if the market didn't drop a lot. And that's one thing I should have said in the disclaimer, but it's the volatility. You guys got to understand, these plays are only working like this right now simply because the underlyings are moving this much. When they don't move that much, this isn't going to happen where you could get this far out of the money. That's why on a price basis, a percentage basis, these plays are fucking ridiculous. But when you look at them, in this volatility, they're not that crazy. That's why the main key, I talked about it on today's stream. You guys could go through it. But the main key with these options and volatility is you want to get in the money. That is the key, and making sure your break even is low and spending a little bit amount of money. The next thing, I said this on stream, right now in this volatility, the thing you want to do is spread out these $60 puts, especially like Apple. I'll make a video on, I'm still holding a couple thousand worth now of the puts, but I had $500, I think, or $300 turn into 3,000 just by spreading, on some of these puts out. And I only did it on a few companies, and thank God Apple was one. But this is, I think the Grim Reaper, or it's like Passover with stocks, one by one. You're going to start seeing a lot of these tech and overvalued and growth concerns start to hit stuff. But so spreading them out in the small amounts, but that's what I'm saying. Be careful and cautious with the dates. But you'll even see I went one over, and I said it was too expensive to take that risk because the markets are at a volatile spot. But this, I took a risk reward. I still took a big risk. But now the strategy to this in the volatility is when you could expect big market moves. Again, if you watch, why did I expect a big market move? Go watch the video. I said what to expect this week. I couldn't have predicted Apple today. I really couldn't have. But I thought the Fed would produce a big result, and just where we were at in oil. And, it's kind of crazy to see how that played out. So it's the volatility was what I was expecting, which made me do the play. So that's one of the big factors. What is the last part? I have one more important part. Well, I said in the video, looking, it's just really the timing of the calls. Again, like I'm saying, it's what I was expecting in the volatility. If you didn't have these factors, this play would not have worked. But the key here is identifying what could go to the money and at what price. It was at 132 for it to go back to open and below. I was able to make that play. And the fact it was Wednesday, it was a decent amount of time with the volatility. But during volatility, the key is, and you saw it today, I sold out. I don't know what I could have got for these contracts. I sold out and I got 384. Wow, I sold those pretty good. Did I sell all of them? Yeah, I only got two. So where is it? Oh, see, wow, they're at 450. So you see, I could have got more. I think I sold them. I sold them probably one. I sold them pretty decent. I think I sold them up here, around here. I think I sold them up here when they were coming down. They hit 480. They're at 450. But I did end up rolling over. I remember. I'll show you guys that one. But the whole point is here, take your profits quickly on these dailies. That it's both the finesse you see, and that's what I said during the video. It's the finesse of when to average, the timing, and going through. But this case, Nvidia's chain, and I was saying it on stream, it looked really ripe just because Nvidia is a big mover. It was linked to stuff. We even brought up, I thought it was so weird. We brought up Apple. Someone brought it up in slow iPhone sales on the chat, but it was the factors around it. But here in the volatility, it's not that you always straddle and play both sides. But another thing to take from this is how I did the straddle or the spread or whatever you want to call it. But I bought the call, I got up substantially on it, and then I bought the put when the puts were cheap. But the biggest key I'm taking from all this that I'm telling everybody is going for the money, and understanding, okay, how much am I paying and what is the odds of the stock going up here by this time, and really getting that. And that's what I was looking. I'm just looking to get intrinsic value, and that's what happened. And why did I sell? I sold out early here. I averaged in. I got another $80 put, but again, I titled this 60 to 600. I put in 60 bucks. It turned into 180, and then I put in 120 more. So I really put in 180 bucks total, and I got back, 600 whatever. What was it? Got back 628. So probably made like what, four something off of that, but got all the money back. It's not, again, just straight profit, and I still have the call. So I'm actually going to lose that 65 bucks because I didn't sell it yet. So you pretty much, you take off 65 bucks from this, and that's our profit, because this is the net gain after, because we did sell it for 760. That is the net. So not too bad, not too bad. But let me know what you guys think. There's a lot to this play. I want to keep talking about this and go over this. Please come to the stream. It's easier to talk about it because I'm sure you have questions, and I can't explain this in 15 minutes. It goes well beyond this, and there's many situations and different stuff. The strategy here with volatility, though, is go for in the money, and I'm going after the durations and taking advantage of the time and timing to get in the money at appropriate prices. But then also, I'm in front of the screen and using it quickly. I will show you on some of the other plays, like some of the apples I played that were longer term and like out to February and March, even longer, and how you could play even the puts on those. But in volatility, I will leave you with this. Be careful buying longer term puts. At the end of the day, the shorter term puts, spreading them out here, even in smaller amounts, I've been noticing I've been doing better for me. I'll let you know if that's changed, but I've been having to adjust. It's mixing it between midterm puts and shorter duration. And that's what I mean, midterm is duration on the time. But it's volatility. You got to be really quick with it, because in these bear markets, if you get the longer term puts, they'll go down. But the minute you get one of those 500-point rips, they get killed. But the same thing on the short duration. So that's why you guys got to be careful. The best thing here is timing. And that's the next thing. I sold out of my NVIDIAs. I waited till the stock went up. I got more. But now I'm out, and I could reposition. I'm liking how NVIDIA is looking. I'm still going to keep watching it. But the best thing you could do in volatility, what I gave you one way, that one's still risky. The number one thing, you could maneuver your plays like this, sell out, pull back for a couple days, and then come back in. Makes the world's difference. So I'll leave it at that. Hopefully this helped. Let me know what you guys think. I love you all. I'll see you tomorrow morning.